To the markets, which are grappling with volatility once again right now. Take a look at the VIX. We do have it up 9.7% right now. And since the war began, Wall Street's fear index has pretty much lived up to its name, gaining 33%. But, you know, if you go back to February 27th, the day before the U.S. and Israel began their air campaign on Iran, the VIX stood, let's call it, at around 19. Since then, of course, it has leapt. We are at 26.6, but well off the highs of 29 hit on March 6th. Over the same time period, oil has gone parabolic due to the frozen tanker activity Edward just talked to you about in the Persian Gulf. But instead of fretting over these market dislocations, what is the smart money noticing and doing to find opportunity? Let's get right to the floor show. BNY Wealth Head of Investment Strategy and Equities, Alicia Levine, has noticed one thing in particular that indicates, I guess, Alicia, what could be a very smart black gold trade. What is it?
Well, it's really interesting because although oil's up 40% since March 1st, actually the oil stocks aren't up. The energy stocks are up maybe 1 or 2% since that time. And energy had been very strong in the previous 6 months. So we see this as an opportunity actually to buy energy stocks here because we think that the floor is going to be higher on oil, both Brent and WTI, which is what American consumers pay, of course. And so we think this is an opportunity because it hasn't moved. We also like technology here because technology has already had its sell-off. And you have much of technology that had already been in a correction and some in a bear market. And we think this is a very interesting place to get into technology as well. And when you get trouble in the rest of the world and concerns about cyclical growth, which we're going to have with higher oil prices, investors tend to flee to technology. And actually, since March 1st, technology has outperformed every other sector.
Yeah, it really has. But you call it still the most volatile sector. That surprises me because, as we see, there is quite a bit of volatility to go around at the moment.
So, look, we are saying nobody knows what's going to happen here. And as we've seen in trading, if you remember Monday morning in the pre-open, markets were down 2% and then finished the day up 1%.
Yeah.
You know, Brent was at 125 on Sunday night and finished down 11% the next day. So these are very volatile markets. I think what the market's telling you is that the markets are expecting volatility now. The truth is, Liz, the market's off 4% from the high, and we have oil at over $100 a barrel. That's remarkable because you've got panic in the oil market and you don't have it in the equity market, and you don't have it, you know, the dollar's only up 2% as well.
Yeah. Can we put up that comp that we were talking about where you have Brent? There we go. So this is since March 2nd. Since the first opportunity to really trade. Brent's up 39%, crude oil, West Texas, up 44%, and yet the Spider Energy ETF, which has those stocks you're talking about, is up only 3.5%.
Right.
So you're saying that trade in black gold is the individual names. Would it be the refiners? Would it be the integrated oils?
So it would be the E&Ps. It would be the explorers and E&Ps stocks. We think there's an opportunity here. Natural gas is a great place to buy as well. I mean, if you look at what's happened to nat gas prices in Europe, they're up 60%. That's the kind of, you would think that you would see the asset classes responding to this. It simply hasn't happened. So you've got the commodities spiking. Gold is down 3%, by the way, since the attacks on Iran.
Why do you think that is? Usually it's the safe haven.
That's right. So we're not actually seeing a safe haven trade here. We're seeing the dollar up only 2%. You would have thought it was more. You don't see a rush into treasuries. You would have thought that would have happened. Actually, treasuries have sold off. And the dollar's only up 2%. So, like, you don't see the safe haven trade. Staples are down, and we don't like staples here because we think staples have the price has actually come so far based on their fundamentals. They're trading twice their forward multiple historically. So staples have had their trade. We don't like the trade. People aren't going into staples either. So the market is really thinking volatility now, normalization later. And that, of course, is the risk, because the risk is everyone's expecting this to be over in the next 2 to 3 weeks, and you have to be cognizant of that.
Okay, so you dollar cost average in, or as we like to say, you ladder in when you see days like this where we have sell-offs.
If we saw the VIX over 30, we would be advising to buy the market. And we tend to use the VIX as a time, if you're timing, if you're thinking about where do I add more capital. I'm a little concerned about, all the policy changes in such a short period of time. We can have a hot war. That's never good for assets. Okay. Markets always recover within 6 months. And so VIX over 30 is a good buying point.
Okay, Alicia's giving you a plan and telling you to be brave and hold on tight. Thank you so much.
Thanks, Liz.